Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of FCA Deepak Rao, a practicing Chartered Accountant. Hot Topic Bulletin on IFRS Sustainability Disclosure Standards, IFRS S1 and IFRS S2. The International Sustainability Standards Board or ISSB issued its first two sustainability reporting standards on 26 June 2023. This included, first, general requirements for disclosure of sustainability related financial information or IFRS S1, which is the core framework for the disclosure of material information about sustainability related risks and opportunities across an entity's value chain. Second, climate related disclosures or IFRS S2, which is the first thematic standard issued that sets out requirements for entities to disclose information about climate-related risks and opportunities. The ISSB mandate is to develop and issue a comprehensive global baseline of sustainability reporting standards for consistent, comparable, and high-quality sustainability reporting designed to meet investor needs. IFRS S1 and IFRS S2 are the first of these standards to be issued. The IFRS Sustainability Disclosure Standards are structured on the Task Force on Climate-Related Financial Disclosures four-pillar approach, which is governance, strategy, risk management, and metrics and targets. IFRS S1 requires entities to disclose information about its sustainability-related risks and opportunities that is useful to primary users of general-purpose financial reporting in making decisions relating to providing resources to the entity. In order to meet this objective, entities need to have an understanding of the resources it relies on and the relationships along its value chain. This is because the entity's relationships and interactions with stakeholders, society, the economy, and the natural environment throughout its value chain is linked to the ability of the entity to generate, amongst other things, cash flows over the short, medium, or long term. Sustainability-related risks and opportunities may influence an entity's cash flows, access to finance, or cost of capital over the short, medium, or long term through current and anticipated effects. Step 1 helps identify sustainability-related risks and opportunities that could affect an entity's prospects over the short term, medium term, and long term. Step 2 helps determine the disclosures to provide in relation to the sustainability-related risks and opportunities identified in Step 1. IFRS S2 is a thematic standard that builds on the requirements of IFRS S1 and is focused on climate-related disclosures. IFRS S2 requires an entity to identify and disclose climate-related risks and opportunities that could affect the entity's prospects over the short, medium, and long term. To achieve this objective, an entity is required to refer to and consider the applicability of industry-based disclosure topics as defined in the industry-based guidance on implementing IFRS S2. In addition, IFRS S2 requires entities to consider other industry-based metrics and 7 cross-industry metrics when disclosing qualitative and quantitative components on how the entity uses metrics and targets to measure, monitor, and manage the identified material climate-related risks and opportunities. The cross-industry metrics include disclosures on greenhouse gas emissions, transition risks, physical risks, climate-related opportunities, capital deployment, internal carbon prices, and remuneration. For example, when providing greenhouse gas emissions disclosures, IFRS S2 requires an entity to measure and disclose its Scope 1, Scope 2, and Scope 3 greenhouse gas emissions in accordance with the Greenhouse Gas Protocol corporate standard subject to certain transition reliefs. IFRS S1 and IFRS S2 are effective for annual reporting periods beginning on or after 1st January 2024 with early adoption permitted. This is subject to endorsement of the standards by local jurisdictions. There are a number of transition reliefs when the standards are first applied. These include the ability to elect to only report on IFRS S2 climate-related risks and opportunities for the first year of adoption, along with the relevant requirements in IFRS S1 to the extent that they relate to the disclosure of climate-related information. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.